Well, I think there was a narrative, well, a quarter ago that the peak of cord cutting may have been behind us, and in fact, the rate of decline of traditional pay TV subscribers actually decelerated a bit in the second quarter, but then it reaccelerated in the third, and so whatever narrative was out there that said things are getting better, it turned out to be a bit of a head fake. Things are back to accelerating, and truth be told, even in the second quarter, the reason things got a little bit better with cord cutting was simply because new household formation accelerated. The underlying trend of cord cutting actually continued to accelerate right through the first 3 quarters of this year.
Is that what's driving these stocks, Craig? I mean, we mentioned that more than half of the sector is at correction territory, meaning 10% off the highs. You know, is that where the sentiment has gone bearish?
Sarah, I'm not sure that it is. In some ways, I think most sophisticated investors, at least with respect to the cable companies, obviously not for their satellite companies, but for the cable companies, I think the discussion has moved on from video to broadband. And I think most sophisticated investors know that what happens with video subscribers actually isn't all that critical to most cable companies. For a satellite operator, DirecTV inside of AT&T, or for Dish Network, that's all she wrote. That's the whole business. So there, it obviously, there's no way to escape it. But for the cable companies, they're about broadband. In Comcast's case, I think there was a lot of dissatisfaction with the move that they made in buying Sky. That's put some pressure on the stock. Charter was a particularly over-owned stock early in the year, so each one has or in this time last year, so each one I think has a bit of a different narrative, but I don't think it's the video subscribership numbers.
What do you make of Disney's news last week, Craig, their own plans, now that we know a little bit more about them, to launch direct-to-consumer products, and whether that is a game changer for Disney on the one hand and for Netflix in the opposite direction?
Well, this is where the market's been telling you they're going for a long time, right? The world's in this very interesting migration now, all following Netflix and following the scale that Netflix has built, to create these kind of closed media systems. That is where the studio output of a given studio is all distributed by that same company, and where the distribution is all dependent on what's created in the studio of that same company. So all of the cross-selling from one to another dries up. And remember, the whole value system, or the value chain of the media business, existed in order to syndicate risk for the studios. And if you're going to reconcentrate that risk in individual companies, they have to be really large. So Netflix made that clear first, and they started the path toward real scale. That's clearly what Comcast wants to do in buying Sky. It's what Disney has said they're going to do. And I think you're going to see a relatively small number of players that can succeed at doing this. And by the way, it's still not entirely clear how profitable this is going to be for anyone. You've seen Netflix obviously way down from its highs. It's not entirely clear that this is actually going to be a great business. But I think it's clear that a business like Disney, with the assets that it's got, is much better positioned to do this than are most of its traditional media competitors.